Shaping up to be the most anticipated listing of next year, but it could look very different than the Ubers and WeWorks of this year. You're just talking about them, but unlike them, Airbnb does operate in the gig economy space, connecting users with a service. Unlike them, it's been EBITDA profitable for the last 2 years, and with $3.5 billion in cash as of the first quarter of this year, it could be looking at a direct listing. Its business model is also fundamentally different. I like that Kara was just talking math. Here's what we know about Airbnbs. For a typical Airbnb stay, the company takes in about 15% in commission fees. The host is charged around 3%, the guest around 12%. This is the lifeblood of this company. The revenue that pays for its costs, like running the platform, and services like the host guarantee and protection insurance. That model, though, is changing as Airbnb goes deeper into the hotel business and competes with big chains and online travel platforms like Booking.com, neither of which charge guest fees. The host or hotel, in Airbnb's case, end up paying more. Earlier this year, remember, Airbnb acquired Hotel Tonight, and it's developing essentially its own hotel in New York with major developer RXR Realty. The key question, guys, when Airbnb files its S1 is whether it's bringing in more money through those commissions than it is spending on costs, things like insurance, which could be a very large cost. Remember that Uber once had a profitable quarter thanks to big mergers in Russia and Southeast Asia. Gig economy companies at large had their own metrics like ride-sharing's contribution margin, and who could forget WeWork's community-adjusted EBITDA. So it'll be critical to see how Airbnb calculates its unit economics and its profitability when it opens the books for its IPO prospectus, guys.
Deirdre, how much do you expect that to swirl around as we get closer to a potential Airbnb IPO? And I guess sort of mid-year next year is a critical period because a lot of issues are trying to see if they can get out before the presidential election season really ramps up.
Yeah, I think that the folks we talked to here in Silicon Valley, they say that the IPO market is still good for a certain kind of company. Mostly those are enterprise software companies that have done better but are still coming off their peaks rather than the gig economy companies like Uber and Lyft and WeWork. But Airbnb, it's not really easily classified as either, right? It's asset light, and it has sort of this revenue that it takes through commission fees. So it'll be really interesting to see what happens when they open the books for their S1, and also particularly going to be important how fast it's growing. Because, John, this is a 10-year company, as you know. Are its best growth days behind it? Or, you know, what are IPO investors? What are they buying into with Uber and Lyft and some of these other high-profile names? Their growth rate is actually slowing by the time they come to the markets.